Hello, Accounting 201 students. This is Professor Hassey. This is our week number 3 for the week of September 14th and 16th introduction video. And this week we continue with our discussion of Chapter 2 by looking at 3 key problems, 2.1, 2.2, and 2.4. In Blackboard in week number 2.3, you have a worksheet, a spreadsheet that you can download and do these problems and follow along with me as we do them in class on Monday and Wednesday. So please feel free to download that file and maybe even start on the work prior to class on Monday. Also this week on Wednesday, we're going to spend a little bit of time on talking about the Community Engagement Day that you, some of you maybe have participated this past weekend, and also talking about your Flex book, The Good Talk by Myra Jacob. We're going to discuss that and talk a little bit about that on Wednesday, and it's going to lead into other discussions that we will be having in this course and outside the course in regards to community work that we will be doing. Also this week, we'll be introducing Chapter 3, which will be our discussion for week number 4, leading into your first graded assignment next week, which will cover the first 3 chapters of our work this beginning of this semester. But before we conclude this introduction video, let's take a look at a couple of videos supplied by the textbook publisher as an introduction and review for Chapter 2. The second video will help you with problem 2-4A. So let's take a look at those videos.
Hi, I'm Paul Kimmel. In this chapter, you're going to learn about the financial reporting process. The financial reporting process is the process that actually produces the numbers that are used to prepare financial statements. Why is this important? Suppose you wanted to invest in Walmart. Walmart could provide you with the billions of transactions that occurred in the last year. This would not be very useful. Instead, the accounting recording process accumulates the information about Walmart's transactions and groups it in a meaningful way. The accounting recording process is referred to as the double entry system. It uses things called debits and credits. This course is about a lot more than just debits and credits, but in order to do well in the rest of the course, you need to become very comfortable with debits and credits. If you practice, debits and credits will become very second nature to you. That will enable you to focus on those things that are more important in subsequent chapters.
In this exercise, we will see how to analyze errors and the effects on trial balance. A trial balance lists accounts and their balances at a given time. A company usually prepares a trial balance at the end of an accounting period. The debit balances are listed in the left column and the credit balances in the right column. A trial balance proves the mathematical equality of debits and credits after posting. This equality occurs when the sum of the debit account balances equals the sum of the credit account balances. In addition, it is useful in the preparation of financial statements. A trial balance does not prove that a company recorded all transactions or that the ledger is correct. Numerous errors may exist even though the debit and the credit columns agree. For instance, the trial balance may balance even when a transaction is not journalized. A correct journal entry is not posted. A journal entry is posted twice, incorrect accounts are used in journalizing or posting, or offsetting errors are made in recording the amount of a transaction. Let us now look at an illustration and see how to analyze errors and their effects on trial balance. The bookkeeper of Red One Corporation made a few errors in journalizing and posting. For each error, we are required to indicate if the trial balance is in balance. If the trial balance is not in balance, we will indicate the amount of difference in the trial balance column that will have the larger total. In the first case, the bookkeeper omitted a credit posting of $500 to accounts receivable. Here, the trial balance will not be in balance as only a credit posting has been omitted. The corresponding debit entry has been correctly posted. The amount of difference will be $500 and the debit column will be larger because the credit posting was omitted. Next, a debit posting of $850 for prepaid insurance was debited to insurance expense. In this case, only an incorrect account has been used for posting. This will not affect the trial balance total, and thus there will not be any difference between the debit and the credit column of the trial balance. In the next instance, the bookkeeper journalized and posted a collection on account of $175 as a debit to cash for $175 and a credit to accounts payable for $175. This is the correct journal entry to record a collection on account. Since this has been correctly posted, the trial balance will be in balance. In the fourth situation, a credit posting of $380 to income taxes payable was made twice by the bookkeeper. This will cause the trial balance debit and credit totals to differ. The amount of difference will be $380. The credit column will be larger because the credit posting was made twice. Next, the bookkeeper entered a payment of $95 for telephone charges as a debit to office expenses and a debit to cash. In this case, the trial balance will not be in balance because the payment of $95 has been entered as a debit to cash instead of a credit. Thus, the amount of difference will be $190. The debit column will be larger because both the accounts, office expenses, and cash were debited. In the last situation, a debit of $400 to advertising expense was posted as $365. Here, an incorrect amount has been entered in the books. Thus, the trial balance will not be in balance. The amount of difference will be $35. The credit column will be larger because a lesser amount has been posted to the debit.
As you can see, it gets a little confusing, but one of the things you're going to occur to you, all of you, during the course of the next couple of weeks, is as you do journal entries and post them to the ledger, the account, you'll make some errors, you'll make some mistakes. And to be able to have the ability to go back through and see the difference in the debit and the credit columns and the trial balance, or understand the nature of your mistakes, that'll help you limit your mistakes and also correct them. So we're going to run into that a lot. We're going to make errors. People, even professionals, make errors in accounting. So how to recognize those and how to fix them is very important. So again, our study this week is going to concentrate on chapter 2, and in your textbook you concentrate on problems 2.1, 2.2, and 2.4, and they are also those are also for people who don't have access to a textbook this week. They are also posted in week number 2.3 as your review problems, and we will review these in class all day Monday especially, and maybe into Wednesday, and then begin our discussions of adjusting accounts in chapter 3. So have a great rest of your day Sunday. As you can see in my background, I'm watching football and getting ready for class for tomorrow. So thanks everybody. We'll see you all in class at 8 a.m.